Alrighty, folks, we're back and we're going to jump right into it, right? So where I left off, we were talking a little bit about our president-elect LVAR, George Kiprios, and his conversation with Bob Hamrick the other day. I think it was about a week ago now, where they just went over the market stats, right? It seems to be a new segment they're doing, or George has put together, where he talks about the market stats with the brokers of the community. Fantastic. I love it. I think it's incredible to provide that insight and the information for the agents out there. And that's engaging. It's actually very entertaining to watch and get to see two people have a conversation, right? Instead of just the typical stat reading that was done before. But yeah, fantastic. Great job on that, George. Wanted to applaud you for that. But anyways, let's jump into the conversation that I wanted to talk about. So I think it was Bob actually that mentioned that unfortunately for buyers out there and how it has been for like the last year with the rates the way they are, a lot of times these buyers are getting mortgage payment shock when they get an accepted offer, right? And they shouldn't be getting the shock of a payment when they get an accepted offer.
No, they should
know the payment. They should know the payment before you write an offer.
That's right.
If you speak with a lender first, but you always should, right? Especially, obviously, if you're getting a loan, you have to. Mm-hmm. Can you provide all of your details? Can you make sure that you're actually going through all of the, income information and the details with the lender? And then lenders out there, can you make sure you're getting your clients in before they're writing offers and breaking down costs, points, fees, etc., all that stuff? Why are they finding out after they have an accepted offer and then being shocked when their payment's $500 higher than they expected it to be?
Yeah.
No wonder the cancellations are 20+%, right? That's ridiculous.
Well, you know what I've seen? Some people are out there heading out shopping for homes with a pre-qualification letter and not a pre-approval letter. Right. Huge difference.
Absolutely.
Want me to tell you?
Yeah, please explain.
Yeah. So the difference, pre-qualification is basically you go online, your credit's read, you put in what your income, your assets are, and it's not checked. So high level, you're pre-qualified based off of the information you state, right? But it's not verified. Once it's verified, a pre-approval letter is when you go through the motions. The lender asks you for the most recent 2 years tax returns if they're required, W-2s, pay stubs, bank statements, and you're actually reviewed. That time frame usually takes about 24 to 48 hours, depending on your level of complexity. If you're a self-employed business owner with multiple businesses, it could take up to 48 hours. Right. But that's really what you want. You want to go out there shopping with certainty. Nobody wants to make an offer and have it fall apart.
So here's what she just said in layman terms, as simple as possible. A pre-approval is good.
Pre-approval is good.
A pre-qualification is worthless.
It's worthless.
It's worthless, people. That just means you wrote down some stuff on a paper that says, I make money here, look. Mm-hmm. At the end of the day, it don't mean much to listing agents out there, and it really doesn't, show any strength on an offer, right?
Correct. So
lenders out there, any of you guys that happen to listen to me, I have a challenge for you guys. And Sheila, you do very well at this, right? And that's why I find it so interesting. But can you guys start going after people instead of agents and start talking with the people ahead of time and getting the details of the payment and all the, the boring stuff worked out so that we can have some fun and show them houses and write offers?
Yeah, my stuff is the boring part. I always tell them I'm preparing you for the fun part.
Right. But I feel, in our industry, right, it's always been that mostly consumers head to realtors first, right? Maybe it's because of the part of the job that it entails. It's, it's really the meat of everything, right? People care about the house, right? That's the important part when it starts, right? And then they worry about what's going to cost me. What am I going to spend, right? But at first it's like, I want a house. It's pretty. It's beautiful. Let's go look online. And the first thing they get is a call from a realtor a day later because they were clicking around online, right? Or an hour later. And so it starts there always, right? And their goal and our goal, right? It's get an appointment. Get them in the office. Get them at the house, right? Like, we want to move. But, they're nowhere yet, right? We're like, oh, we'll figure it out.
Yeah.
I would love to see it to where, somehow it transitions slowly almost to where lenders are actually being in front of people a little more. Because I'd love to see it to where, someone walked up to a lender. It's like, hey, I want to buy a house, but I know I need to talk to you first.
Right.
Every consumer is like, I'm talking to a realtor. And then when something goes wrong on the mortgage, whose fault is it too?
Yeah.
Most likely the realtors at the end of the day. But it's just funny. So anybody out there, consumer looking to buy or sell, please, even if your lender's not telling you or your realtor's not telling you, ask what your payment's going to be. Go through your PITI, right? Your principal, insurance, taxes,
And interest.
Sorry.
Yeah. Well, Jacob Taylor, that is what we do.
Right. But
we review everything. With
I'm
client.
trying to get these people out there to see that before they go into escrow. It'll make everyone's life easier, right? Mm-hmm. And it's as simple as having that conversation with your lender. It is boring sometimes, a lot of the times. Even me, myself, when I did it with Sheila to buy my house, I didn't even ask for the details. I was like, it is what it is. What's the number? That's all I was concerned with, right? Because I was a little bit of trust there, obviously. So I'm like, what's the number? I don't care about all this. What's the number? I need to know what I'm paying. Right, at the end of the day, I don't care if I'm buying it for $400, for $500, for $600, for $700. What am I paying every month?
Right.
That's what's important at the end of the day. And I know I mentioned this quite a bit too, and I want you to touch on this if you're aware, right? But I think Bob was mentioning about, or George mentioned that someone was saying about half a point in interest rate is effectively about $40,000 in borrowing power. So those rates go from 7 to 6.5. Your buying power goes from 4, if that's what the peak was, to 440 potentially, right? So that was their estimate about how much it opens up.
Yeah.
However that sounds. So, right. So we were talking about the last year, right? Rates, it's pretty well known, right? So, they're not changing much, right? It's not going to be like it was 2 or 3 years ago, right? It's not going to be there. And I think
that was artificially lowered by the feds.
What he's saying is I think that's kind of beginning to be accepted, right? At the same time, there also is a little bit of relief on rates slowly, right? And sometimes that relief goes away the week after, but it comes for a little bit, right? And you could lock some people at better than what we're seeing the previous weeks. For example, in the last month, have you gotten anything under 6.75?
Yeah.
You have?
Yeah.
Okay.
Well, let me fill you in.
Please, yeah. Update me. I'd love to.
Yeah. So the feds voted last week, earlier this week. Today is Saturday. It's earlier this week.
Okay.
They're not lowering the Fed fund rate right now. So they stalled on that. So what you guys need to know, follow the bond market. When the bond market's doing good, mortgage-backed securities is the bond market, 10-year treasury bonds, et cetera. That directly ties into home interest rates. The Fed fund rate ties into short-term lending, HELOCs, credit cards, auto loans, that kind of thing. So when you hear the bond market's doing good, that typically means that the long-term interest rates or housing interest rates are going to start to improve. So the forecast for the end of the year, through the end of the year, and we get our information from Barry Habib with MBS Highway. He just won his 4th crystal ball. And what that means, guys, is he is one of the most accurate forecasters in real estate and lending for over 20, 25, 30 years. This guy knows his stuff.
He's a smart guy.
Yeah, and he doesn't just guess. He follows trends and indicators. So interest rates towards the end of the year are supposed to be low 6s. And a matter of fact, right now, FHA's already in the low 6s.
Really?
Yeah.
Are you seeing some 6.25s already?
Yeah.
Wow.
FHA.
See,
Conventional usually trends a little higher. It just is what it is.
Your govies are usually pretty.
Govies are a little lower because you're supplementing it with the upfront funding fee, mortgage insurance premium for FHA, or the funding fee for VA.
Right.
So. But it's all good. So we're seeing improvement already.
Awesome.
Yeah.
Yeah, and so even to further, go off that, right? That's going to bring more buyers. That's all it's going to do is bring more buyers.
Yeah.
And then another thing we talk about too, and I think it's important to highlight, our average sales, right? What we're generally used to is not what we've had the last year or two. We've cut our sales by a lot the last few years. Compared to typically, we're used to seeing, 3,000 to 4,000 plus sales every month. That was normal, right? So there's this pent up demand of people that didn't buy the last few years,
right?
That are going to be jumping in eventually, whether it's now, 2 months, 3 months, 6 months. They've been waiting the last 2 years. Right? Eventually, it's acceptance. Right, that 6.75 is now 6.25.
Yeah.
How much lower is it really going to get? As they also watch the price of homes increase as the rates are barely moving.
Yeah.
Right? What happens when they go a little bit lower? Right? It's just going to squeeze the market more. Right?
I'd like to mention this real quick. COVID was an anomaly.
Absolutely,
The feds were literally pouring in billions of dollars buying up mortgage-backed securities. That's what artificially kept rates low. So if everything would have been left alone, and they wouldn't have, we would have already been at these rates where we're at now. Maybe even a little lower sooner. But it is what it is. So long story short, if you come to my home buyers classes, you learn about all this. We have them once a month at the real estate guy's office. And they're really good because you learn what goes into the interest rate. You learn what it takes to prepare to purchase.
And
really
they're free
good
to you.
information. They're free.
It's just
and
info.
You get refreshments. We always have a raffle. We have a good time. It's interactive. No stress. Bring the kids. It's fun. There's something for everyone there.
Absolutely.
Investors all the way to first-time
I
home
can
buyers.
guarantee you, at worst case, you take out some new knowledge in buying a
Right.
home that you'll feel better about the next time you make a decision. Right? And that's all it is at the end of the day, is really being educated, right? And having the best, idea of what's going on in your transaction to be able to make the best educated guess or
Right.
decision, right? Because that's what it is half the time. Right? You're like, we're going to go with this option. Hopefully it works out.
Correct.
Cross your fingers.
You got it.
With that, we're going to take another quick break. And when we get back, maybe we'll talk a little bit about some politics. There's some fun stuff going on there. Talk a little bit about some stats. I forgot I also have some houses of the week for you guys. So, yeah, don't head anywhere. We'll be right back. If you need to give us a call, you have a question for me, you have a question for Sheila, you want the real estate guys to help you buy a house or sell your house, 702-310-6683. That's 702-310-MOVE. Thanks for listening to The Real Estate Live.